Welcome back to Pesa Forever channel. If you have been tracking the precious metals market lately, you know that while gold has been steady, another metal has been absolutely screaming. I am talking about platinum. If you are an Indian investor looking at your portfolio today, wondering if you missed the bus or if this is just the beginning of a super cycle, this video is for you. We are going to look at the data, the regulatory changes that happened in late 2025, and the practical reality of how and if you should add this white metal to your portfolio. We have 10 critical points to cover today to give you the full picture. Let's break this down. Point number 1 is the biggest hurdle, and it is something we need to address immediately. It is the case of the missing asset. If you open your Zerodha, Groww or Upstocks app right now and search for gold, you will find gold bees. You will find sovereign gold bonds. You search for silver and you will find silver ETFs. But if you type in Platinum ETF, you will find absolutely nothing listed on the NSE or BSE. This is the first major realization for Indian investors. There are no domestic platinum ETFs. You cannot buy paper platinum through a standard Indian demat account. This lack of access is why so many retail investors have completely missed out on the recent rally. Unlike gold, which has a massive financial infrastructure in India, platinum is still treated largely as a commodity for jewelry or industry, not a financial asset for the common man. This brings us to point number 2, the 2025 mega rally context. Why are we even talking about this now? Because what happened in 2025 was historic. Platinum was the breakout star of the year. We saw a surge of over 120%, with prices hitting an all-time high of approximately $2,878 per ounce in January 2026. To put that in perspective, for years, platinum was the lazy metal, trading sideways while gold took the spotlight, but that changed fundamentally last year. Investors need to understand that we are currently looking at a chart that has gone vertical. The question you have to ask yourself is, are you entering a new normal where platinum reclaims its crown, or are you buying at a historic peak? The fear of missing out or FOMO is high right now, but you need to separate the hype from the structural shift in price. Now, before you rush to your trading terminal to find a workaround, we need to discuss point number 3. This is a name game trap, and it is a serious warning for stock market investors. There is a company listed on Indian exchanges called Platinum Industries Limited. I have seen countless comments in forums from people buying this stock thinking they are getting exposure to platinum prices. Let me be very clear. Platinum Industries Limited is a chemical company. They manufacture PVC stabilizers and lubricants. They do not mine platinum. They do not sell platinum bars. If platinum prices go to $5,000 tomorrow, this stock will move based on the demand for PVC pipes and chemicals, not the metal. Do not confuse the ticker symbol with the commodity. This is a classic retail error, and it is the first myth we need to bust today. Buying this stock is not a platinum play. So, if you cannot buy a domestic ETF and the stock is unrelated, how do you invest? That leads us to point number 4, the global route and avoiding the tax trap. Since we are in 2026, Indian investors have become very comfortable using apps like Pesa, IndMoney or Vested to invest in US markets. This is currently the most efficient way to buy paper platinum. However, there is a massive catch that no one talks about. If you buy a US domiciled ETF like PPLT and you hold more than $60,000 worth of US assets, you are subject to US estate tax. If something happens to you, the US government can take 40% of your holdings above that limit before your family sees a dime. The smart money move here is to look for funds listed in London or Europe, often called UCITS funds, such as the iShares Physical Platinum. By buying a UK-based fund through these global investing platforms, you get the same exposure to the metal price, but you avoid the US estate tax risk. It's a small geographical detail that can save your portfolio 40% in taxes down the line. Now you might be thinking, why not just buy a coin from my local jeweler? This brings us to point number 5, the physical liquidity issue. You can walk into a high-end jeweler or use platforms like e-bullion to buy platinum coins, usually 999.5 purity. But here's the problem. Buying is easy, selling is a nightmare. Unlike gold, which is money, platinum is still viewed as a product. If you try to sell a platinum coin back to a jeweler, very few will offer you cash. Most will only offer you exchange value, meaning you have to buy diamond jewelry or gold in exchange. There is no liquid buyback market for platinum in India the way there is for gold. This makes platinum a very sticky asset, easy to get into, hard to get out without losing money on making charges and spreads. Let's shift gears to the fundamentals. Why is the price rising? Point number 6 is the green hydrogen pivot. For the last decade, platinum was hated because it was used in diesel catalytic converters and everyone thought diesel was dead. But the narrative has shifted. We are now in the age of green hydrogen. Platinum is a critical catalyst in electrolyzers that split water into hydrogen fuel. As we move through 2026 towards 2030, the demand for platinum is no longer just about diesel cars, it's about the global energy transition. This pivot has transformed platinum from a dying auto metal into a futuristic green energy investment. This is the long-term thesis that is driving institutional money into the sector. Point number 7 explores how to play this theme in the Indian stock market. We call these the urban mining plays. Since there are no platinum mines in India, we have to look at recycling. India is becoming a hub for processing electronic waste. Companies like Gravita India or Eco Recycling, also known as Eco-Reco, are in the business of recovering precious metals from e-waste. While these aren't pure-play platinum stocks, they are the closest proxy we have in the domestic equity market. As the value of the metals they recover, like platinum, palladium and gold, goes up, their margins potentially expand. It's an indirect route, but it's the only equity route available domestically. Next, we have to look at government regulations. Point number 8 concerns the import restrictions updated in November 2025. The Indian government noticed a loophole where traders were importing platinum alloy jewelry with very high gold content to bypass gold import duties. To stop this, they restricted imports of unstudied platinum jewelry. Why does this matter to you? It tightens the supply of platinum entering the country and ensures that what is coming in is legitimate. It brings transparency to the market, but it also means that the days of cheap duty-evaded platinum entering the grey market are over. This adds a floor to domestic prices. Point number 9 is the 2026 market outlook. Despite the massive price jump we discussed earlier, the World Platinum Investment Council and other bodies are still forecasting a deficit. The market is expected to be short by about 348,000 ounces in 2026. This is largely due to supply struggles in South Africa, which produces the bulk of the world's platinum. Between power grid issues and operational challenges, they simply can't dig it out of the ground fast enough to meet the new hydrogen demand. Structural shortages suggest that even though the price is high, the fundamentals support it. Finally, point number 10, the taxation reality in 2026. You need to know what you will take home. If you buy physical platinum, you're paying 3% GST upfront. That's a 3% loss immediately. For global ETFs, the rules have stabilized. If you hold these global funds for more than 24 months, your profits are taxed at 12.5% as long-term capital gains. If you sell before 2 years, it is added to your income and taxed at your slab rate. This is a crucial calculation. If you are in the 30% tax bracket, holding for that long term is essential to make sense of the investment. Now, let's address some common myths that keep circulating in Indian investment circles. Myth number 1 is platinum is always more expensive than gold. Historically, this was true. Platinum was called the rich man's gold. But for nearly a decade, it traded at a massive discount to gold. It is only now, in this 2025-2026 rally, that it is aggressively catching up. Do not assume the price hierarchy is fixed. These ratios fluctuate wildly. Myth number 2 is I can sell my platinum coin at any jewelry shop like gold. We touched on this, but it bears repeating. Do not treat platinum like an emergency fund. You cannot liquidate it instantly for cash in every town in India. It's an investment for the long haul, not a quick flip. And finally, the myth that buying Platinum Industries stock is a proxy for the metal. We have debunked this, but please double-check the business model of any company before you buy. So, where does that leave us? Platinum offers a compelling high-risk, high-reward proposition right now. The supply deficit is real, the hydrogen story is just starting, and the price momentum from 2025 is undeniable. However, for the Indian investor, the access points are difficult. If you're going to invest, the global ETF route via the UK seems to be the most efficient and tax-safe method. Physical platinum should only be for those who love the metal itself and are willing to hold it for decades without worrying about liquidity. As always, this is not financial advice. I am just a guy looking at the charts and
reading the regulations. Do your own due diligence, check your risk appetite, and happy investing. If you found this breakdown helpful, hit that subscribe button so you don't miss our next breakdown into global commodities. See you in the next one.